SpaceX just proved something that should worry every founder out there. You can be brilliant, you can be valuable, but investor confidence still evaporates in hours. On day one, SpaceX stock rocketed up, literally hit a record high as trading opened. Everyone celebrated. The bankers were thrilled. Employees felt rich on paper. Then by day three, the stock had crashed, not a small dip, a genuine plummet down. So here's the shocking part. The company itself didn't change. SpaceX woke up on day four with the exact same rockets, the exact same engineers, the exact same proven track record of landing boosters and launching Starship. What changed? Pure investor emotion. And that's the real story here. IPOs follow a pattern that repeats every single time. On day one, there's pure hype. Everyone wants a piece of the next big thing, and the stock price reflects excitement, not reality. By day three, reality catches up. Investors start asking hard questions. Is the valuation too high? Can they actually make profit? For SpaceX, those questions arrived faster than a Falcon 9 booster returning to Earth. The stock didn't just wobble, it got pummeled. And if you understand why this happened, you'll understand what's coming for the next tech companies lining up to go public. This is where it gets interesting. Before we dig into why the stock crashed, let's talk about what SpaceX actually is, because most people don't realize how unusual this company is. SpaceX isn't a social media app. It's not a software company. SpaceX builds actual rockets, real, physical, reusable rockets that carry satellites and astronauts to orbit. Founded by Elon Musk in 2002, SpaceX spent years being called impossible. Everyone said reusable rockets couldn't work. The physics was wrong. The engineering was too hard. Then SpaceX landed a booster for the first time in 2015 and everything changed. Suddenly spaceflight became affordable. Launch costs dropped by 80%. That innovation changed the entire industry. Fast forward to 2026. SpaceX runs Starlink, which beams internet to remote parts of the planet. They've launched thousands of satellites. They've carried astronauts to the International Space Station. They're building Starship, the biggest rocket humanity's ever constructed, designed to eventually land people on Mars. So when SpaceX finally went public, investors were excited. This wasn't some unproven startup. This was a company with billions in revenue, proven technology, and a real future in space. And this is crucial, here's where investor excitement and reality begin to drift apart. SpaceX opened trading at an IPO price of $125 per share. Investors couldn't get enough of it. The stock jumped to $170 on opening day alone. That's a 44% gain in just a single trading session, absolutely massive. Everyone who managed to get shares early felt like they'd made the investment of a lifetime. But then something completely predictable happened: profit-taking. When a stock pops that dramatically in one day, people who got early access start selling to lock in their gains. They're not wrong to do it. A 44% return is fantastic. But once those early sellers start moving shares, it creates a chain reaction through the market. Other traders see the price falling and they panic. They start wondering, is there bad news coming? Should I get out while the price is still high? That fear spreads through trading floors like a contagion. And more people sell. By Wednesday, the stock had fallen to $98. By Friday, it was at $85. That's a 35% drop from peak in just 5 trading days. Now here's what this pattern reveals, and it's crucial for every investor to understand. So what does this crashing stock actually mean in the real world? Well, first, SpaceX employees who got shares as part of their compensation watched their wealth drop 35% in a single week. That's painful, but here's the wild part. They probably didn't actually believe the company was worth 35% less on Friday than it was on Monday. The company's technology didn't change. Its customer contracts didn't evaporate. Starship was still being built. Starlink was still launching satellites and making money. So what actually changed? Just the collective opinion of traders and investors. That's all valuation ever is, group consensus about what something's worth. And when the consensus changes, prices move fast. This is why IPOs are so volatile. Before going public, SpaceX was worth whatever Elon Musk and the board said it was. Private companies don't have a stock price. There's no daily vote on whether they are valuable. But the moment they go public, thousands of people get to vote every single day through buying and selling. That creates instability. That's also why retail investors, regular people, need to be careful about buying stocks on day one of an IPO. The market hasn't figured out the right price yet. You're trading on emotion, not data. And here's what history shows us. SpaceX's IPO stumble isn't unique or surprising. Look at other recent tech IPOs and you see the identical pattern repeating. When Nvidia went public back in 1999, the stock initially surged, then crashed during the dot-com bubble. When Tesla went public, it had similar wild volatility, soared, then dropped, then climbed back over years. When Broadcom and other big tech companies opened, same exact story. The pattern is almost mechanical. Massive hype on day one, brutal reality check by day 5, then a long-term story that plays out over years or decades. What makes SpaceX interesting is that it's not a software company or semiconductor company. It's a hardware company that requires billions of dollars to build actual physical products in the real world. That means its business model is riskier than most tech stocks. Customers need to commit to multi-year contracts. One failed launch could affect revenue for a quarter. Competition from other launch providers like Blue Origin and Rocket Lab matters, so investors should logically be more cautious with valuation. That might mean $125 was actually too high from the start, or it might have been fair and the market just panicked. But here's what's really important to understand. Here's what SpaceX's stock crash reveals about the broader market right now. Investors are getting more cautious overall. For the last few years, venture capital was throwing money at literally everything. Any startup with a cool pitch could raise millions. Valuations got completely absurd. But that era is shifting. Interest rates have gone up. The economy is more uncertain. Investors are asking harder questions about whether companies can actually make money, not just whether they have a cool vision. SpaceX is a phenomenal company, but even phenomenal companies need to prove their business model works. They need to show customers will pay. They need to show costs stay controlled. They need to prove they can scale profitably. The stock price of $125 was betting that all of that would work perfectly. The stock price of $85 is betting on a messier, tighter, more competitive reality. Which bet is right? Honestly, we won't know for a while. But this pattern, IPO pop followed by reality check, is happening across the entire tech sector right now. Companies that went public in the last 6 months all saw similar volatility and repricing. This suggests the market is basically resetting valuations on all these companies. The question becomes, and this changes everything. So if you're an investor thinking about buying SpaceX stock or any tech IPO stock going forward, here's what to actually do. First rule, don't buy on day one, just don't. The volatility is too high and emotions are running way too thick. Wait at least 1 week, preferably a full month, until the dust settles and real analysis takes over. Second, look at the actual business, not just the hype. For SpaceX, that means asking hard questions. How many launch contracts do they actually have locked in? What's the customer renewal rate? Are they actually profitable today? How much cash do they burn each month? Are their launch costs actually going down with reusability? These questions are boring, but they matter way more than whether the stock went up 50% on day one. Third, understand that hardware companies are riskier than software companies. One failed launch could hurt revenue for that quarter. One successful competitor could steal market share fast. Fourth, check the leadership carefully. Elon Musk has a proven track record of ambitious projects, but he's also notoriously distracted by other companies. That matters for a space company that needs sustained focus. Finally, be honest about your time horizon. Are you investing for retirement 30 years from now, or trying to make a quick trade? That changes everything about what price makes sense. But here's the thing that connects it all. SpaceX's crashing stock teaches us something absolutely critical about how markets work. Every single IPO follows this same pattern. Explosive excitement on day one, brutal reality check by day 5. Those first few trading days aren't about the company's real value, they're pure emotion and hype and scarcity. The actual price discovery, where real value emerges, happens later, once enough investors have time to analyze the actual numbers carefully. SpaceX is still an incredible company with genuine innovations that changed the space industry. Reusable rockets work. Starship is revolutionary. Starlink is making money. The technology is proven. The vision is world-changing and bold. But here's the hard truth. Being a great company isn't the same as being a good investment at a specific price. SpaceX at $85 might be the deal of a lifetime for a patient long-term investor. Or it might have been fairly priced at $125, or it could hit $200 by 2028. We'll only know in hindsight which was right. What we do know for certain, next time a hot company goes public, you'll understand exactly what's coming. The day one rocket, the day five crash, both are extremes. The real value lies somewhere between them. Keep following this channel for daily AI and tech news. We break down the stories so you actually understand what's happening in the market and what's coming next.